I'm sitting up here with an amazing panel, and I first just want to say thank you so very much. Each of you have come in from outside the Chicago area, so thank goodness that you all arrived and your travel plans went well. But I'm just so grateful you're here, and I'm sure that our guests are going to want to hear this, because now we're going to hear from perspectives of the buyers. So Joelle, if you could get us started, let's see if I can. I don't have great history with the clicker, so I'm going to leave that over to you. But if you could introduce yourself, tell us a little bit about Arsenal Capital and the type of companies you acquire.
I will. Am I on?
All right.
Hi. So I'm the president of Arsenal Capital Partners, and it's my objective today to really just be here to help in any way possible. And so a few things I thought I'd rattle off in quick succession here, because I know we're trying to do this quickly. So Arsenal Capital Partners is a $10 billion AUM private equity firm. We specialize in industrial growth and healthcare businesses. The healthcare is in pharma services and healthcare IT. Generally the lower middle market, so $50 to $500 million of enterprise value. We have about 150 people on our team. We've been around for 25 years. I've been there for more than 2 decades. We have done about 320 acquisitions in that time frame. I'm also married to my college sweetheart. I'm a mom of 3 adults, and I have 3 grandchildren. And so I'm sitting here today representing the buy side, but I also am the majority owner of 5 businesses, and so I deeply understand what's in the minds and hearts of the seller side.
Thank you so much. Garry, we got introduced to you a little earlier.
You've heard about Agora, but for all you guys that are out there and you wonder how I won the jackpot that I'm sitting up here with these 3 lovely ladies, I don't know the answer to that, but it's kind of fun. So.
Thank you for being here. Tiffany, if you could introduce yourself and tell us about Midwest Equity.
Sure. Thank you for having us. I think the information that's been provided today is excellent, and I'm happy to contribute. My name's Tiffany Williams. I'm the founder and CEO of Midwest Equity, which is a private equity real estate company. I'm here today to talk about the perspective of how real estate comes into the transition planning, succession planning process, and how owners can extract more value from their overall exit by monetizing the real estate as part of the transition. My background actually is I'm an attorney that did M&A work for about 5 years before transitioning into commercial real estate for the last 24 years, and our firm has just over $1 billion of assets under management in 14 states.
I'm so grateful you're all here. So this is going to be rapid fire. It's a lightning round all day for this group, because I'm going to try to extract as much wisdom, and there is a lot up here, as we can get. So Joelle, what are private equity firms looking for in a business?
Yeah, so, not in any particular order. Strong, capable revenue streams that are dependable, cash flow, great management teams in markets that are aligned with, ideally, the expertise of the firm that is interested in them. So really good positioning in those markets is important. And the ability to really accelerate the investment. We're holding up a company for, nowadays it's extended a little bit, let's call it a 4 to 7 year window. And so figuring out how we can come out of the gates as quickly as possible, acknowledging there's probably a bit of a dip in the J curve, but then how do we scale up that business as fast as possible? And sometimes that's operational improvement, sometimes that's add-on acquisitions. So the way we get there varies, but those are some of the main platform items we're looking for.
Great. Garry, how important is personal owner readiness to a sale?
So owner readiness is critical. It's probably the most critical thing. You can have a great business, growing great value, great people, but if the owner isn't ready, if the owner doesn't understand the questions that buyers are going to ask, then everything could just come to naught. And so it's really critical. It's probably the most important thing to have the owner understand and have clarity around what they're trying to do.
Okay. Tiffany, do owners typically know about all their options, especially with regards to real estate in a sale? Things like a 1031 sale, when they're looking to sell. So when owners come to you, do they know much about this?
Generally, I would say unless they have real estate holdings, a lot of owners may not know about the ability to use a 1031 exchange transaction to separate the real estate asset from the business itself asset. And there are advantages in separating and looking at real estate as a separate asset in that you can defer gain on that real estate and move on the sale of real estate, the proceeds into new assets without paying capital gains. And due to the tax laws, you can also then reinvigorate depreciation to shelter income tax after the sale to the extent that you have tax basis left. There are also a lot of other strategies that can be involved consistent with the goal of minimizing what's going in that tax bucket, both in terms of the sale, but also income and also estate planning. The 1031 itself is something that you just have to plan for ahead. A lot of times a buyer of the business may not want the real estate. So knowing about the 1031s, you can plan in advance, potentially execute a sale-leaseback transaction where the buyer of the real estate may be separate from the buyer of the business to maximize proceeds is something also that the buyer should be thinking about.
Well, so you grabbed onto my next question, which is bouncing right back to you. So how can owners maximize, and by the way, we've heard a couple themes in there. Nobody's looking to raise their taxes apparently, and everybody's looking to plan ahead. So we've heard these themes over and over again today. So I would definitely grab onto that. How can owners actually maximize that real estate holding itself, besides the planning in advance?
Yes, so it's important to consider whether or not holding the real estate is critical to the sale of the business asset. And if it is critical, then doing a sale-leaseback transaction where that may come well before you sell the business, but you monetize the real estate aspect of the business. And oftentimes the multiple on a sale of real estate is significantly higher than the business itself's multiple. So it can be like a stair step to move towards sale of the business. If it's that the likely buyer doesn't want the real estate at all, that's something also to think about in advance, and potentially you end up, when you sell the business, having a vacant building, which may be less valuable than if you sold it earlier in the succession plan.
Excellent. So Joelle, we want to peel back the secret curtain and know, how do you value a business?
Yeah, so the number side is usually EBITDA and a multiple of EBITDA, and that's usually based on the business itself as well as what's happening in that space in terms of comparable transactions that have occurred. We also take into account what the quality of the management team is. How long do we think that management team will run? Is it the team that will take us through the next exit, or will we need to bring in some additional talent in order to accommodate an exit on the other side? What's the customer concentration? That's very important. A lot of companies overlook the importance of concentration. If there's too much, then it's going to be less appealing to a buyer. So getting that balance. Some companies don't even know necessarily what their concentration is, nor do they have a really good grasp on what the margins are by customer. That's another thing that's really important for us. But it also just, I want to make sure I also mention, it's not just about the as-is state of a business, it's about the story, and one of the folks who were just up here was talking about the story of what can be. So that buyer is not just buying what is today, but they're buying the potential future of that business and where it can go, and that does have an effect on the way in which we value a business.
I'm going to just bounce back to you in a little surprise add-on question, but how important is human capital in that equation?
Yeah, so quick anecdote. We've had, somebody else was also mentioning humility. For us, that's one of our core values, and so you'll never see like one of our team members, they better never show up at your company with cufflinks on and sit at the end of the table. Like, humility is just really important to us, and we've walked away from deals because the management team isn't humble, or we don't feel like we can take the management team that's there the next turn, or it might be too dependent on one or two individuals within the organization, and if we don't have a lot of confidence in their ability to stay and their ability to scale, which is also really important to us. So we have walked away from deals. We walked away from deals 20 years ago because of human capital issues, and it was not a popular thing then at all. So yeah, vital.
You were an early adapter of rejecting bad human capital. Right. Garry, in preparing for a sale, and the due diligence is really complex. So how long does it take to prepare for the maximized transaction with owners?
Well, we've talked a lot about being ready and the time it takes to grow value in the business, which is considerable. But in terms of, we haven't really talked too much about when do you really involve other experts, other people, which the due diligence and preparing for that is critical, because a buyer is going to get into all kinds of stuff, right? And so there's sort of three timing aspects. There's your own business and your preparation and where you are. You want to be growing, you want to have good people, you want to be able to maximize all the characteristics of a good business. There's the third piece is your industry and the timing within your industry. Is it growing? Is it succeeding? Is it innovative? Or is it declining? So you want to be able to have good timing there. And then the third piece is just the economy in general. Where is things happening, right? Where's the best time to be able to play with that? And to put a thumbs up or a real focus on the investment banker, they're really the ones that can help you with that. And then once they get going and you kind of determine when you can actually flip the switch, you immediately got to get people in to help due diligence, get prepared, so that you're not going to face any significant issues with that.
So if I'm worn out in my business and I want to go, I have a 4x multiple now and I'd like to get to 10, 6 months, not really going to cut it then?
You want to go from a 4 to a 6?
Yeah.
Or 4 to a 10?
Yeah, 4 to a 10.
A 10.
Not in 6 months, huh?
In 6 months. No, that's probably not likely.
Okay.
Yeah.
It's a longer, yeah, right? It's a longer path than that. This can take a couple years, really, when people want to get all that.
I mean, longer. It can be 4, 5, 6 years. If you think about you have a hole in your management team. You need a new COO or CFO or some senior person. How long does it take to get that person hired and on board and actually working and learning the business and then being able to make a difference, really get embedded in the business? It could be 2 or 3 years just for that one process alone. So the more runway you have, the better.
All right. Well, we're going to just bounce around because we're still going to grab as much wisdom as we can from each one of you. So we'll start with you, Tiffany. What are some top actions that could be done today? We've heard of so much that can be done to prepare, but what do you think some that stand out to you?
So back to the real estate focus, which is my perspective, it is really to think about your real estate as a separate asset that should be monetized from the business itself. And thinking about what to do with the real estate asset, and if you transition out of that specific real estate asset, utilizing the 1031 exchange, which allows you to defer capital gains on the sale of that real estate, and at your death, it will get a step up in value, which then wipes out the gain that you had, so your heirs can avoid paying a gain tax on that sale. At the same time, it's extremely powerful because if you have any tax base left in the real estate, when you do the 1031 exchange, you can utilize depreciation again to shelter income. Often what we see is back to replacing active income. If you invest in the right thing, Midwest Equity is a structured solution for a 1031 exchange. We can kick off cash flow in our fund somewhere between in the first year, 7 to 8% cash return for that investment, and over time growing, while at the same time, because it's treated as a partnership, given partnership tax treatment, giving depreciation to the investor, they can avoid paying income tax on that income for anywhere, depending on their tax base, anywhere from a year to 8 years if they had full tax basis. So there's just a lot of powerful tools, both on the income tax side, capital gains, and estate planning side. Also on the estate planning side, some of our investors have done things like pairing their real estate investment in an ILET with life insurance, second to die life insurance, to keep that out of their estate and also fund payment of estate tax if they're facing significant estate tax liability down the road.
I'm hearing great things that we like in our industry, like deferred taxes and step up in basis. Definitely love those things. But I'm also hearing IRS revenue codes like 1031 and all that. So this is not a DIY project, is it?
It's not. You need experts.
All right.
And we like to have the experts involved early in the process and the full team that has the perspective of all the different ways to monetize.
Yeah, absolutely. Joelle, what are some of your opinions on what are the top actions to take right away?
Yeah, I just want to double click on a couple that have been said that are really important. Think early, plan immediately, and make sure that you as a person are really ready. So we'll come in as a private equity firm and we're having management presentations, and it's amazing how many times CEOs aren't necessarily really ready for what the day after the sale looks like. So, you know, if you've got some run room, that's something to really pay attention to, and there's some great information out there. I mean, there's great advisors, there's some tremendous software that can help you kind of think that way, great books and materials on the topic, but I think it's really important. You have to be emotionally prepared for it, and in most cases, you're probably head of household also, so making sure that you are going to continue to be a strong head of household, and shoring up your own confidence and clarity on the day after, I think is really important.
Yeah. I mean, back to that owner readiness, Garry, what we're hearing, is the owner ready? I mean, a huge part of that is what comes next. And so what is the top action that an owner can take to really think about what's coming next? What's a top action that an owner can take to understand or start to explore what's going to come next for them?
I mean, the owner needs to be able to go back. It's really the three questions that Aaron asked, right? What do you have? What is your business? What assets do you have? You know, where are you growing your products, and on and on? What do you have? And then secondly, what do you want? What would you like to see out of it? If you don't paint a clear picture and look at the options and understand where you can go and what you can do and consider those things, and then position your business to go down that road, you're just not going to achieve a good exit. And then that fourth question, how do you prepare? Once you've defined that, then you can prepare for that.
Okay, this one we've got to go lightning round because I want to hear this from all through you, but biggest mistakes. So we're now going to work on the blooper reel of some of the mistakes an owner can make as they're going. So Joelle, what do you think?
Oh my gosh, the biggest mistake? There's so many. I'd just say, you know, so if you're going to exit the business and you plan on exiting when you exit the business, that's one thing. If you plan on staying in the business for in some capacity, perhaps in a chairperson role, perhaps as an advisor, pick some group that you're going to truly partner with and test that, sanity test that. It's really important if you're staying in the business or your kids are staying in the business that you have a financial buyer or a strategic buyer that you're comfortable working alongside, and then truly partner with them. Bring your own expectations to that relationship.
Garry, biggest mistake.
So I would say the biggest thing that we see that's such a huge negative is most business owners really don't have a clear idea of the market value of their company. It's always high, right? And so to get them to understand realistically what their business is worth is a process that needs to happen. And you need to involve, you know, an advisor, you need to involve an investment banker, you need to involve people, because it's almost, I mean, we laugh up here. Joelle was laughing because it's constant that it is just off the charts.
Yeah. Tiffany, blooper reel.
Yep. Mine would be, assuming you're going to value the real estate as its own asset, understand utilizing something like a 1031 exchange has timelines that the IRS has set out, and you have to comply by those timelines. So make sure that you have advisors that help you understand those deadlines. They're hard ones, and if you miss them, it's a big deal. And then second is make sure the thing you exchange into is quality and it achieves your goal. So if the asset you're exchanging into is just the first thing you could find that's real estate and you have to still manage it, you didn't really achieve anything. But there are things to exchange into that are high quality and passive that have a great track record. So make sure you do your homework in advance.
All right, so summary, plan ahead, have good partners. These are reoccurring themes, and keep the taxes low. So we're going to bring up the next video. Thank you so incredibly much to this panel for being here and for flying in for it.